Hi, and welcome back to Hughes Group Jax. Let's talk about how we can address these high interest rates. Hi, I'm Alia Hughes Simpson.
And I'm Wendy Hughes.
At Hughes Group Jax. So, Wendy, what are your thoughts today?
So, with the interest rates that we have right now, which are, I will say I've been doing this 19 years, and they are the highest that we've ever seen.
Mm-hmm. In 19 years, not ever.
Right. No, in 19 years, exactly. And so, which, the average real estate interest rates, when you look over the history from like 1930s, is 6%.
Mm.
So we had abnormally low interest rates in the last years.
Right.
So, but what do you do when you have a change in lifestyle that you either need a bigger home, smaller home, you need to move for work, and it's a great job, and you want to take the job? What can you do to
address these high interest rates?
Exactly.
Right, because a lot of sellers feel locked into their low interest rates. Maybe you bought a home that you're growing out of, or the time has come to move. Because 60% of homeowners have an interest rate below 4%, it could be hard to leave that behind.
Right.
So one suggestion we got from an awesome lender was that a lot of people just look at their interest rate on their home, but they don't look at their blended rate with their credit cards, which could be at 22%, with their car loans, which could be at 7%. And so what she suggested is that you could take the money that you make when you sell your home because of your lifestyle change, and instead of putting it all into the next house, you could pay down those credit cards, pay down that loan payment, and then your blended rate, your overall interest rate in your life would be much lower. The benefit of doing this, obviously, to get a lower overall interest rate in your life, but also because right now you don't have as much competition. Well, I know a couple years ago we were all aware of the feeding frenzy with multiple offers, waiving inspections, going without appraisals, paying way above asking price, and some sellers now feel, or some homeowners feel, stuck in their house now waiting for the equity to catch up so that they could sell. So instead of waiting to when we have another feeding frenzy, you could buy now. Yes, you might have a higher interest rate than you do in your current home, but your blended rate could be lower. And then when interest rates start falling next year, which they're predicting to do, then you could refi. And some lenders have programs where it's no money, no cost to you to refi to get a lower payment. And then instead of waiting to get a low interest rate in the future, not focusing on your blended rate, you don't have to compete with all those other buyers and pay over asking and pay over appraisal price and waive your inspections and have to spend all this money on the house. So it's easy just to look at interest rates, but we really encourage you to look at that overall blended rate and then how you could save money in the long term buying now instead of waiting when interest rates dip and there's a feeding frenzy.
That's right. So everybody's situation is different.
Right.
And so that's why if you have any questions, feel free to reach out to us. We can answer as many questions as we can. If we can't answer them, we will certainly get you to the right people who can and can help you with your situation. So we hope to hear from you soon with your questions.
And make sure to like and subscribe so you don't miss the next video. Leave any comments with questions or tips that you have for fellow homeowners.